Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host, AlgoBot, and today we're studying a pure price action system called Protected Swing Breakout. This strategy doesn't rely on a single traditional indicator. Instead, it reads raw market structure the way many smart money and ICT-style traders do, hunting for genuine breaks of structure that are backed by real momentum. By the end of this video, you'll understand how it maps swing pivots, how it confirms a breakout with a displacement filter, and how it protects every single trade with a structural stop loss and a defined reward target. So grab a coffee and let's dive in. So what exactly does the Protected Swing Breakout Expert Advisor do? At its heart, this is a pure price action strategy, which means it makes every decision by reading the candles themselves rather than leaning on moving averages, oscillators, or any classic indicator. It's built around an idea that many institutional and smart money traders follow, known as a break of structure. The strategy is designed to trade trending markets, and it works on any symbol and time frame you attach it to, from major foreign exchange pairs like the euro versus the US dollar to indices, metals, or crypto. That said, traders often apply structure-based systems on the higher time frames, where the swings are cleaner and easier to read. Here's the core idea. The EA continuously maps the market skeleton by identifying swing pivots, the significant highs and lows that price respects. When price decisively closes beyond one of these structural levels, and it does so with a burst of momentum, the strategy reads that as a genuine shift in control and looks to join the move. Every trade is then protected by a stop loss that hides on the far side of the structure that created the move, and a take profit placed at a fixed reward-to-risk multiple. Who is this style suited for? It tends to appeal to traders who like clean, rules-based logic and who appreciate clearly defined risk on every position. Because the stop is anchored to real structure rather than an arbitrary fixed distance, the risk on each trade adapts to current market conditions instead of staying frozen at the same number of pips. Remember, everything we cover here is for educational purposes only. We're studying how the code makes its decisions, not making any promises about results. With that framing firmly in mind, let's open up the engine and see exactly how it works. Let's walk through the logic step by step, exactly as the EA executes it. First, the strategy only makes one decision per completed candle. It waits for each bar to close, so it never reacts to the noisy, unfinished price of the candle that's still forming. On every new bar, the EA tries to confirm a swing pivot. A swing high is a candle whose high is greater than the highs of a set number of bars on both its left and its right. That number is controlled by the SwingLookback parameter, which defaults to 3. So with the default setting, a high must dominate 3 candles on each side to be confirmed as a true swing high. The same rule, mirrored, defines a swing low. The most recent confirmed swing high becomes the bullish structural level, and the most recent confirmed swing low becomes the bearish one. Next, the strategy measures momentum. It calculates the average candle range over the last 14 bars, a window set by the range average period. Then it looks at the breakout candle and asks a simple question. Is this candle's range at least 1.3 times that average? That multiplier is the displacement factor. This filter is crucial. It keeps the EA on powerful, momentum-driven breaks and rejects shallow pokes through a level that often turn out to be liquidity grabs rather than real breakouts. Now, the entry. For a bullish break of structure, the EA signals a buy when 3 things line up. The breakout candle is displaced, it closes higher than it opened, and its close pushes above the last confirmed swing high. When that happens, the strategy enters a long position. The stop loss is placed just below the protected swing low, the low that anchored the up leg, with a small buffer for padding. The take profit is then set at the risk-reward ratio multiplied by that structural risk, which defaults to 2, meaning the EA targets twice the distance it is risking. A bearish break of structure is the exact mirror. When a displaced candle closes lower than it opened and below the last confirmed swing low, the EA signals a sell, hides its stop above the protected swing high, and projects its target downward by the same reward-to-risk multiple. 2 final safeguards keep things disciplined. The EA holds only one position at a time for its magic number, and it never re-enters on a structural level it has already traded, so a single swing can't trigger a string of repeated orders. Let's read the actual MetaQuotes language code on screen, just as you'd see it in MetaEditor. At the top are the input parameters, the dials you can adjust before launching the EA. SwingLookback, set to 3, controls how many bars a pivot must dominate on each side. Raise it and you demand bigger, rarer swings. Lower it and you react to smaller ones. Range average period, 14, sets how many bars feed the average range calculation. Displacement factor, 1.3, is the momentum gate. Increase it, and only the most explosive candles qualify. Risk-reward ratio, 2, stretches or tightens the take-profit relative to your risk. Lots fixes the trade size, and magic tags every order, so the EA only manages its own positions. Now the signal block. This is the bullish case. The condition first checks that the breakout candle is displaced and bullish, meaning its close is above its open. Then it confirms we have a swing high on record, and that the candle's close has pushed above that swing high. It also checks that we haven't already traded this exact level, and that a protected swing low exists to anchor the stop. Once all of that is true, the code reads the current ask price as the entry. The stop loss is the protected swing low minus a small buffer. Risk is simply the distance from entry down to that stop. The take profit is the entry plus the risk-reward ratio times that risk. Finally, the EA fires a buy order with the stop and target already attached. The bearish block, just below this in the file, is the precise mirror image, selling at the bid, hiding the stop above the protected swing high, and projecting the target downward by the same multiple. Let's bring it to life on the chart. On screen, you can see price marked with the key structural levels this strategy watches. Notice there's no oscillator panel here, because this is pure price action. The levels themselves are the signal. Follow the action from left to right. Early on, price carves out a swing high, the blue level, and then pulls back to form a swing low beneath it, shown in gray. That swing low is our protected level. Price then coils and pushes higher, and watch the breakout candle. It's noticeably larger than the candles before it, clearing the displacement filter, and it closes cleanly above the blue swing high. That's our bullish break of structure, and the buy entry fires right there. The stop loss tucks just under the protected swing low, and the take profit sits at twice that distance above. Price follows through, climbing steadily until it tags the take profit. That completes the long trade. Now the market shifts. After topping out, price sets a fresh swing high, which becomes the new protected high in gray above. It then pulls back and prints a swing low, marked in red, which becomes our downside structural level. Watch the next strong candle. It's displaced again, and this time it closes below the red swing low. That's a bearish break of structure, and the sell entry triggers. The stop loss hides above the protected swing high, and the take profit projects downward at twice the risk. Price slides lower, working its way down until it reaches the target, completing the short trade. Notice what stayed constant in both directions. The EA waited for a confirmed close beyond structure, demanded real momentum from the breakout candle, and anchored its stop to the opposite swing. This is purely an illustration of the logic, not a prediction of how any live market will behave. And that's the Protected Swing Breakout Expert Advisor from top to bottom. We covered how it maps market structure from confirmed swing pivots, how the displacement filter keeps it on momentum-driven breaks, how it enters on a clean break of structure, and how it protects every trade with a structural stop and a reward-to-risk target. We also walked through the actual MetaTrader 5 code and visualized both a long and a short trade on the chart. Remember, this video is for educational purposes only and is not financial advice. If you found it helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment telling me which expert advisor you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.